Right now, I'm going to just talk a little bit about the market outlook. I mean, this is a real high wire act. I mean, most clients, they say, we've got increasing COVID cases. No vaccine is directly on the horizon. We have no idea what's going to happen in Washington in terms of a stimulus. We've got over 8% unemployed. Why is this market at all-time highs? And you're right, there's a lot of reasons to be cautious here. I mean, we thought Europe knew how to handle COVID. It became a big political battle here as to how we were handling it. But look, they're having increasing cases there, particularly in some of the big cities, Madrid, London, and Paris. They're starting to restrict activity. Is that coming here? That's definitely a reason to be cautious right now. In terms of the vaccines, we've had, there's over 100 entities across the world that are working on a vaccine. But the fact of the matter is, they've got to do the trials. And we had some setbacks in the trials. Certainly, AstraZeneca had a mishap with one of their participants. J&J put their trial on hold. So we don't know when the vaccine's going to come out, which most people agree is the only thing that will allow them to effectively engage in the economy. We're looking at probably here in the United States, Q2 of next year, maybe Q3 in Europe, but there's no certainty there. In terms of the stimulus, basically the latest news here is that Majority Leader McConnell has told really both parties that they're not prepared to do a big bill before the election. I think they're going to be passing a $500 billion bill. That's well short of what the White House and the House of Representatives want to do. So I think there's very little likelihood of seeing something before the election. Most people are hoping that we see something post-election, but there's no guarantee of the amount, exactly what it's going to cover, and the date there. In terms of the election, we thought it looked to be Biden's to lose just a couple of weeks ago. That has tightened now. But I think most people acknowledge it's not just the White House, but also control the Senate. If the same party controls both the presidency and the Senate, there's a lot more control than if there's a complete flip, let's say a total blue wave. And if that's the case, what does that do to corporate taxes and therefore corporate earnings? What does that do to regulation? These are certainly reasons for near-term caution. Again, with the economy under the COVID blanket here, earnings have been under pressure. As a result, stocks are quite pricey now at about 22 times next year's earnings. That's the highest since, 2 decades ago at the height of the dot-com bubble. And you know what happened after that. So there's extra reasons to be, very cautious as we approach this market. We are now getting results in terms of Q3 earnings. And quite frankly, they've been mixed. In many cases, the actual results have been better than expected, but the guidance is either withdrawn or very, very cautious. Particularly some of the financial stocks have been very cautious as to what the outlook holds. So that's a reason to be a little bit nervous here in the market. And finally, of course, we know the consumer is 70% of the economy, but we have seen continuing very high initial jobless claims, continuing high claims for unemployment, better admittedly than April and May, but still historically very high. And that suggests a bit of a slowdown in the recovery. We were carried for a while because of the checks coming out of Washington. Those, as everyone knows, probably ended at the end of July. Right now, there's a big valley here until perhaps the next stimulus package that is weighing on things. Okay, so then on the next page, we also show one very interesting feature of this market is how if you strip out the top 6 tech stocks, including Facebook, Amazon, Apple, Netflix, Google/Alphabet, and Microsoft, you actually have a market that hasn't done much this year. So that's one reason for optimism, that it's possible to steer clear of some of the very pricey elements in the market and focus on those areas which have not been bid up to astronomical valuations. That's what we're going to try and do for you in a minute. Next. So here's the bullish case here. The fact of the matter is, each day we get closer to some of the big headwinds, resolving some of the big headwinds in the market. What do I mean by that? Well, the election now is less than 2 weeks away. Hopefully we have a decision and we wake up the next day. But ultimately, even if it was the year 2000, it's a prototype, we will have a decision before long. So that uncertainty will be behind us. Vaccines. With 100 entities around the globe working as hard as they can, we're going to see something sooner rather than later. And remember, it's almost like a 1960s style space race. Every country is working on it so they can take the mantle for the very first vaccines. That's the reason for optimism. As we just mentioned, as we just focused on the prior slide, if you strip out big tech, valuations are much more reasonable. And of course, at the end of the day, T-net still prevails. There is no alternative with interest rates pinned down and look to be pinned down by the Federal Reserve for years now. That makes stocks the natural alternative. And then finally, we're going to see, I think, big fiscal spending with the next bill, but I think we can also see it worldwide. Even the IMF, the International Monetary Fund, is endorsing governments around the world, instead of being frugal, to go big and spend money to jumpstart economies. And that's quite different from the approach that many countries, including our own, took a decade ago during the subprime crisis.